Hello and welcome or welcome back to the Import-Export Hub channel newsreel. Borin Bagdan here, your host for the next couple of minutes. I hope you are doing all great. Thanks for joining in. And guys, without making this intro too long, let's start with the quiz question for this week, which goes like this. So to whom did Tunisia exported the most in 2021 in terms of value? And the options here are Italy, France, or Germany. And guys, the correct answer is France, to whom Tunisia exported some $4 billion worth of goods. It was followed by Italy with a little bit over $3 billion, while Germany was Tunisia's third largest export destination with some $2.2 billion. And now that you know Tunisia's main export destinations, let's take a look at the Freightos index. And we have here the values from the 20th of January. And basically, we have $2,178 for the overall index, which is down 3% from the previous week, with big movers here involving the sub-indexes connecting Europe to South America East Coast and China to the Mediterranean. The former up almost 30%, while the latter finally breaking months of so-called stability, as we see here a drop of 20% again week on week. Now, relative to the main head holes, the Trans-Pacific ones continued their downwards path, and we have $1,323 for the China to North America West Coast sub-index, and $2,626 for the other ones, so China to North America East Coast. While for the crossways ones, well, we have $3,420 for China to North Europe, which is up 15% week on week. While for the other sub-index, as I've said previously, we have a 20% drop. And guys, my guess is that there is still a little bit of room for a downwards readjustment, if you want, in the next 2 or 3 weeks. So anyways, these were the main updates in terms of spot freight rates. Now let's take a look at what's happening around the world, and I will start with the world of maritime shipping, container shipping to be precise, as a much awaited news, at least for me, popped up in the media a couple of days ago. And guys, don't get me wrong here, I am not enjoying this, but it had to happen, as container ship owners are finally beginning to either postpone or convert some of the new builds order book, as they finally became concerned about the industry's massive vessel order book, according here to Alphaliner. The most affected being the smaller vessels, which could face increasing pressure from vessel cascading. And okay, we're not talking about cancellations per se, but without a doubt, this is a confirmation that the owners are aware of the current freight market, which is struggling to contain the fall. And we will see some interesting quarters this year, I'm sure. I think that this is just the first wave, if you want, and I won't be at all surprised to see that some second-tier shipping lines will follow suit soon with deferred orders or even cancellations. And I don't know, if I were a big shipper, I will definitely play the spot market more this year, even though until May, which is basically the tendering period, we won't see big cancellations. I think that the alliance members are holding tight until the tendering season ends in order to, again, contain the fall. But I don't know, beginning with June or July, I will expect some news about order cancellations coming also from the big guys. So basically, this was my first news from the world of shipping. The second one concerns the 2021 MCS complaint against the Mediterranean Shipping Company. If you remember, I've covered this story back then. And well, guys, long story short, we finally have a verdict coming from the Federal Maritime Commission judge called Wirth, as MSC has to pay almost $1 million to MCS Industries as it failed to comply with the Federal Maritime Commission's order to turn over certain documents relating to its contracts with MCS. Mediterranean Shipping Company basically didn't lose time and made the statement, of course, and they are pretty much disappointed with this decision, invoking the procedures to fully comply with both US and Swiss laws when producing documents. According to them, they will appeal the decision, invoking here that the Swiss authorities at the very highest levels have confirmed that Mediterranean shipping company must follow the well-established procedures under the applicable international conventions, to which apparently both the United States and Switzerland are parties. But my guess is that Mediterranean shipping company is left alone in this shitty business, sorry for the poor choice of words, and that the Swiss authorities don't want to be involved. And frankly, I wouldn't be surprised if MSC don't appeal the decision at all, and instead of a friendly dispute resolution like Casco did in 2021, I don't know, they've chosen to flex their muscles, and now they are paying for this, not in dollar value. Let's face it, $1 million is peanuts, but in, I don't know, credibility and PR points, if you want, which is priceless right now. Anyhow, if this is how they want to behave, let them be, as I will now move to an article coming from ING Think, which covers China's export performance, and we can still call it performance, guys, even though it contracted, signaling a weak external demand, which could hamper their economic recovery. Basically forcing the government, according to this article, this analysis, to intervene and spend more on infrastructure projects in order to fill the gap and ensuring that enough money is poured into the system. As for China's imports and exports, well, exports contracted almost 10% from December last year, while imports fell 7.5% with 3 months in a row in which both flows registered contractions, even though overall the year-on-year exports and imports grew with 7 and 1.1% respectively. And I don't know, with strong headwinds coming from the United States and Europe, and without any significant increase in infrastructure investments, ING analysts maintain a GDP forecast at 2.1% for 2021 and some 4.3% for 2023, which is not bad, guys, but not the figures China used to deliver until 2020. And as we are on the topic of China, I will move now to my last news, in which it's covered the potential import-export boom between Vietnam and China, as the latter finally loosened its entry requirements. If you remember, the article is somehow focused on seafood and fruit exports from Vietnam towards China, but I think it's safe to say that indeed the overall exports will boom. And just out of curiosity, I've managed to get my hands on the export data from Vietnam towards China for the last couple of years, both for the overall exports and seafood exports. And I will have to confess that things are looking good for Vietnam, as the overall exports towards China increased steadily from 2017 onwards. For 2022, unfortunately, I have the figures for just the first 3 months, but I think that the yearly figures, if you want, will be more or less close to those of 2020. While in terms of seafood exports, 2021 wasn't a very, very good year for Vietnam. Its exports shrinked with some 30% relative to 2020. And my guess is that the 2022 figures will be more or less the same as those of 2021. And now, again, this article confirms this. With the restrictions loosening, maybe in 2023, Vietnam's seafood exports will see the values and volumes of 2020. And guys, with this being said, that's all for today. Thanks for watching. I hope you've enjoyed. Don't be shy and comment if you're not, if you don't agree with my comments. And as usual, until next time, keep your business safe. Thanks.